Hello traders everyone and welcome to our new webinar. It's final webinar of the year. It's December 30. So as you know, market has been relatively slow. But before we can continue, just please let me know in the chat box here in YouTube if you can hear my voice well. Can you see the screen? Because I'm streaming this from home office, so it's a bit different setup here, and the real pain in the ass when you have a different computer. So Tim is here. Looks like that everything is fine, I guess. Hey Tim, happy New Year to you as well, and everyone else, of course. Okay, so before we go to some of the charts, let me just remind you that I sent out last week my 2025 forecast. As you know, I have been doing this for the last several years, and it's always nice to go through some of the higher degree time frame charts to have a really full perspective of what may happen next year. So I definitely want to be prepared. So if you want to watch this video, it's obviously free. You go to our homepage, go to resources, and you will click on blog, and then you can see that that's where we have this video. Also, obviously, you can watch it on YouTube. And if you will find this interesting, make sure to check our discount. 30% off offers are available till January 10th. So make sure to explore them if you will find the value in our content. So, what's going on? Firstly, we will look at the cryptocurrencies. As you know, they're saying that cryptocurrencies, Bitcoin is coming to the downside because of USDT in particular, that has been delisted from some of exchanges in the Europe because of new regulations. And if you are, for example, long on Bitcoin versus USDT, then of course you may experience some that exchanges will automatically close your positions. So maybe some see that that's one of the reasons why there are some liquidations and why Bitcoin is coming to the downside. But in my opinion, it's all to risk off. Okay, keep in mind that if you look here, the chart below, you have the Nasdaq 100 versus Bitcoin, and the correlations is very tight. And last week, I also said to our members that because stocks have been relatively at high levels in December, of course, there will be a lot of profit taking going on, especially since Fed turned hawkish. And obviously, no one wants to take a risk. We'll be holding the risk going into the end of the year. So that's why some profit taking has seen and caused this reversal to the downside. And we particularly have seen a very significant decline, obviously, when there was a latest FOMC rate decision, and then another turn to the downside occurred on a Friday. And now it looks like that we are now just seeing a continuation of this pattern. So I think that there is a chance for deeper pullback on stocks, and because of this correlation with cryptocurrencies, I'm not surprised to see Bitcoin even lower. Now, there are some that are waiting on alt season, and there's no alt season. Because if you are seeing stocks and Bitcoin coming to the downside, it's very hard to see an alt season. Alt season will happen when you have stocks in uptrend, meaning that there is a risk on sentiment, and then Bitcoin is the only one that takes a pause. Then you can see an alt season, because I can not imagine that someone who will sell stocks and Bitcoin, that they will buy altcoins. Okay, because altcoins can be even more risky and volatile. So I think that for alt season, we definitely will have to see a rebound on stocks, and then we will have answers if maybe this will send higher Bitcoin as well, or will Bitcoin just stay sideways and then alts will follow higher. But for me, the guide map for whole crypto market is definitely Bitcoin itself. And when I see it here right now, there is a room for weaker prices. I think that wave C is underway. As you know, we've been tracking, and I also shared this on Twitter and social media, that we are here moving into the final stages of fifth wave, of an extended wave 3, and that we should be aware of a reversal. And now the risk of that we are seeing is definitely have an even better impact, even better impact on the bears here. So I think that this free wave decline is now in progress, and that very key important level should be around 85,000 to 90,000. Let's see what happens down there. There can be more liquidations on the way to these levels, but if everything goes as planned, then when normal flows will return, when more liquidations will happen, I think that January we could see a new stabilization. That's also the time when maybe we will see a move to the downside, or not move to the downside, but the reversal on dollar. As you know, I have been saying that a dollar is in recovery mode, but if we consider what happened in 2016, 2017, well, dollar, that's when the dollar has seen a top when Trump took office. So maybe now we will see the similar situation. That's perfect timing maybe for other assets to rebound. But for now, we are still in these corrections that, in my opinion, are not finished yet. But if suddenly, let's say that I'm wrong on Bitcoin and that we will not see a support around 85,000 and we see push below 80,000, then I think that that Bitcoin or cryptocurrencies will be in trouble. Also, keep an eye on maybe on MicroStrategy here. MicroStrategy also is making a very deep retracement. I think that this level is very important. We have some gaps, and you know what I think about gaps, right? So these gaps, firstly, when they are opened, they will be seen as a magnet, but once they are filled, market can reverse back into the previous direction, because some of the unfilled orders here that has been that can be executed can again change a trend here. So maybe we will see a rebound, and if this zone of a support at 270, 290 will really hold, then I think that there would be quite a nice indication that even Bitcoin could also turn to the upside. So as I said earlier, risk of mode is something that is driving these markets around for now, and I have been looking at this wave count for a while. We've been tracking this wedge formation, and you can see that there was a very nice and strong impulsive sell-off when Powell, despite the cut from Powell, but somehow he was dovish for next year, and that's why we have seen a serious decline here, clearly in impulsive fashion. And then, more importantly, what happened on Friday? Well, market again stopped at the resistance at the 78.6% with free wave rally. So this profit taking clearly took place here, and now what we are seeing is just a continuation lower. And I'm afraid that there is going to be the third leg of decline, possibly even back towards this level from start of November. Now, if you also try to maybe to do the measurement for the third leg, maybe the first support could be here around 5,780. Let's see what happens down there, but obviously you cannot rule out potential another 80 points deep here. So hold this zone will definitely be very important for next month. So if you will be looking for potential opportunities, maybe in some single stocks, maybe just looking at trading maybe futures indexes here, then of course I think that it's better to wait now and let's see what happens down there. I think that this would be much better, more attractive pairs to maybe to look for potential long entries, especially when in January maybe normal flows will return. Maybe there will be some even more optimism because of Trump will took office. Also, Trump will maybe want to have lower, weaker US dollar, and of course, this can all contribute to potential rebound here once we are at these levels. Now, one market that we should also take a look at very carefully is German DAX. So it's not only the S&P 500, as you know, German DAX is also seeing a very strong reversal, clearly in impulsive fashion here. And now I think that we are just in a corrective rebound. So even this one, which by the way has been quite stronger compared to the S&P 500 here through November and start of December. But now even this one is turning to the downside, and I think that it just confirms the idea that maybe stocks are in a pullback and that these corrections are still incomplete here. Also, if you take a look on dollar itself, maybe here a daily chart first. As you know, this is the guide map for the dollar that I'm referring to. So in 2016, 2017, there was dollar recovery, and then what we have seen is a very strong reversal to the downside. So maybe now we are in a very similar pattern, very late stages of this Trump trade, and I think that there is a very strong resistance around to 109, but clearly there can be even 111 retested, and it's still fine for this corrective rally to be that deep. Okay, it really depends how far and how strong will stocks decline. Because if there will be a lot of fear going on, then of course there will be even more movements into safety, and the dollar could very easily move to the upside. But what I think that in the short term, maybe we could retest these upper levels is also because on the smaller 4-hour time frame here, you can see that we are tracking this fifth wave, and this fifth wave should also contain 5 subwaves, and that's not the case yet. Okay, if you look closely here, you have wave 1, wave 2, wave 3, now consolidation for wave 4, so looking for another push to the upside. So I think that this fifth wave maybe can occur already this week, but I'm not sure if we'll see any kind of a real moves out of these ranges. Maybe ranges can be retested on one of the sides, but really I don't believe we'll see any kind of a real breakouts. Maybe on Friday, that's when we will get ICM manufacturing figures from the US, I think, and that's when maybe we could be in some volatile price moves, but I personally think that normal flows will obviously be seen next week. Okay, so one thing that we should also consider, and why maybe 109, maybe even 110 could be seen, is on the 10-year US Treasuries. As you know, this recently broke to the downside, and I still think that this market will retest these levels. Ideally, once this market is around 107 to complete the higher degree downtrend here, with fifth wave now in late stages, that's when real turn on the dollar may show up. So definitely keep an eye on this market. I certainly want to see these prices at these levels, and then maybe dollar index will stop around 109, 110 levels. That's yet to be discovered, but clearly the timing will suggest that reversal will possibly be closer once we are at these new lows here on treasuries. Also, let's take a look on the Eurodollar. So Eurodollar is also consolidating here. As you know, ECB has been and still very dovish, but maybe now they will step on the brake here, because if Fed will change their plans here, and they will not be that aggressive with cuts anymore, then maybe even ECB will do the same, and we will see Eurodollar that will try to stabilize. Now, regarding the Elliott wave pattern, I clearly cannot ignore the very clear wave structure that we have here, and we know how everyone was bullish up here. Even myself, I thought that we will see a bridge to a new high here before we potentially see a pullback, but now I see that the same people, investors, the same sentiment, but obviously on the opposite side, is down here. So I think that if we see close to 102 level, maybe even parity, that would be a very, very strong potential support for the euro. Also, the COT data shows that we are in a very similar positioning, with large speculators being heavily short compared to the reading that was back in 2022. And even if you look further back, we had some similar swings with the same positioning. And I have been talking about this in our video here for 2025 about this positioning on the euro, because I think it's very useful and very, very attractive, especially when you want to maybe define the late stages of the trends. Now, regarding the short-term view, then on the euro, obviously still a downtrend. I think that if we consider that this trading week can be slow, then maybe this wave 4 can even be a triangle here, and that we'll see then a push to a new low in January, and then we stabilize when Trump takes office, when I think that things will be much more volatile and interesting, and we could then see potential reversals. Now let's take a look on gold. By the way, I also talked and covered some longer term charts for gold and silver in our 2025 outlook as well. I even talked about gold silver ratio and other stuff, and definitely I think it's worth to watch. So where we are here on gold, well, I still think that we are in the middle of this consolidation. As you know, we have been calling a top up here when we were trading close to 2,800, when everyone got so excited and so bullish for 3,000 and even higher target. So what market has to do right now is to liquidate all of those that were long very late into this game. So I think that very big support for next year could be around 2,400, 2,300. So plenty of room for this correction to unfold. And if you just maybe respect the Elliott wave, just clear principle here, you had a very sharp reversal from the highs. That was an impulse that even retraced beneath the previous fourth wave. Now that's a very strong indication that the temporary top has been put in place. It would be a totally different story if you would have only free wave rally in free wave, not rally, but reversal into the previous fourth wave support. But because that was only one leg to the downside, well, we have to consider that more weakness will occur. Also, that rise has been made by free waves. So I certainly think that there's more downside potential, and that maybe there will be some limited upside if suddenly we will see some rallies here, maybe even move into safety if there would be some risk of going on. But overall, even silver, of course, I'm expecting deeper price action here. We recently discovered this completion of an ending diagonal, and as you know, whenever ending diagonal is finished, well, market can retrace to the starting point of that pattern. That was right here around $26. And if you also put into this analysis the idea that whenever you have wave C in play, or maybe even just wave 3, the price can move or can be targeting the quality level of the first leg. So that was our first leg. That was corrective wave B rally, maybe even wave 2, who knows. But now you are in the third leg. So you get the projection of equality around 27. So I think the 26, 27 is definitely very probable target for maybe for the start of 2025. I'm not saying for the first week or first 2 weeks, but maybe for, let's say, for the first few months. So if someone wants to be maybe looking for potential opportunities on metals, I just think that there is plenty of time for these corrections to unfold, and better entries will yet to be discovered. And as I said in that video outlook, also I talked about dollar Chinese yuan. Keep in mind that dollar versus Chinese yuan is trading to the upside. I think it will be much easier to find opportunities on metals when when Chinese yuan will again turn higher. But for now, that's not the case yet. And even on that pair, I see room for more upside. So that's why I'm saying that maybe be prepared on potential deeper lower levels here. Now, if we take a look also on crude oil, as you know, Trump in his recent speech, I'm not sure if it was recent. I think it was 1 week back or so. He definitely wants lower energy prices, crude oil, natural gas in particular, because he believes that this should be supportive for economy, and that definitely could be the case. And I would not be surprised that maybe crude oil could break to the downside. I definitely see some very long consolidation here, but we are looking for wave E to step into the final stages of this triangle in the next few weeks, and then just be aware of a reversal to the downside. And maybe this will even try to bring down the inflation here. And if that happens, as you know, if crude oil would make a very strong drop next year, this would bring down the inflation as well, because we know that correlation is very tight there. And we know that, again, this will change all of the markets, especially US dollar and the US yields, could then again see a very strong turn lower as well, and maybe that will be the catalyst for a change on the dollar trend. We will see, but regarding the patterns, I do not see any kind of a bullish formation here. I think that the next year we could see 60, if not $50 per barrel. These were all of the markets that I had been preparing for today, because part of my team is away. I know that a lot of you traders are also away for this week. We also have a limited coverage of this week, because we clearly anticipated just limited price moves here. But we still posted a few updates on our website. So if you're a member, make sure to check our updates. If you have any questions, just contact me in our chat room. And if you're not a member yet or you want to join, we have the 30% discount with this code available still till January 10th. Now, someone asked for Ethereum. Okay, I can take a look maybe on a daily chart, or maybe even better, a weekly chart. So as I said earlier, there is still not alt season going on. Maybe we should wait a little bit longer here. But I think that even Ethereum could possibly, who knows, outperform Bitcoin, because Ethereum and Ratios are very at very extreme levels here. So there can be some very interesting upside potential here. But I do not see Ethereum going higher while Bitcoin is trading lower. I just think that Ethereum has a chance to outperform Bitcoin when Bitcoin will also be in uptrend, but then just Ethereum will suddenly see some interesting inflows. But I think that we are now just in this consolidation, and that you have to be aware of potential retest, maybe even a 3,000 level, especially if this risk of sentiment will resume, or even just stay sideways here till dollar finds some top, because we clearly have to respect what the dollar is doing. Okay, and if dollar will keep moving to the upside, it will be very hard to see other assets breaking higher. I just think that they can consolidate further. Now, someone asked for Aussie versus New Zealand dollar. Basically, we've been bearish on Aussie versus Kiwi, and it has been reversing quite nicely to the downside in the last few sessions, if not few sessions, if not weeks. And I have been bearish, and I'm even holding some shorts here on this pair, because we had some very beautiful reaction from the upper side of the wedge, clearly an impulsive drop here, and now we're just correcting here in this wave 2 rally. So what I'm assuming that may happen here in the next week, maybe 2 weeks, maybe we'll have to be more patient here. But what I think may happen is that this pair will revisit these levels around 109, if not even lower, because clearly that was an impulsive drop, and that was a corrective rise with very nice reversal down from the 61.8%. So clearly I'm holding my bearish view while the market is below 1.1180 invalidation level. Now someone is asking for Ripple, so it's Christmas gift to give you some coverage of the markets. Okay, so what's going on Ripple? As you know, Ripple has been very volatile. A lot of interesting news that drive this market to the upside, and there was obviously a lot of momentum behind of it, because market has been consolidating for a while here in this very big consolidation. So obviously the patience has been paid off here. We have been bullish, and I still think there is a chance for more upside. We haven't reached new all-time highs yet. Maybe some will now try to accumulate even more here, but just keep in mind that that there was a very aggressive move to the upside already in the last few weeks. So maybe we won't see that aggressive or interesting further push to the upside from here. Keep in mind that we could be, when we will start seeing a new turn to the upside, this will be the final push within a higher degree trend. So I just think it's very important not to be over invested up here. Just realize that these are all still altcoins that can be very volatile, and you certainly want to sell those in profits when you are seeing prices. Let me just hide here. When you see prices at the upper side of the range. Okay, so if someone is long, let's say Ripple from year 2 years back, definitely you don't maybe to risk too much up here, because certainly there can be some new liquidations on the way down, and you know that altcoins can be very volatile and can quickly erase all of the gains. So that's why I'm saying that maybe you have to be more realistic and not looking for some crazy targets like I'm reading on social media, because definitely its market will not just so easily award everyone, and everyone just will become rich. Market will always do liquidations on the way up, and higher we go, I think that it's better to go out and book profits on the way up, because on the way down you can be too late. Let me just check here. We have anything else? I have also some other chat rooms. Just a second. Someone asked for, I'm not sure why I'm not seeing here. Grega, my first time here, maybe Pound Asia. Well, those crosses, I mean, those crosses are, I don't like them. I really do not like to trade them, because they are they're definitely not having any kind of a clear trends. I try to focus most on the major pairs, but here, if you just try to look what may happen maybe in the next few months, maybe a few weeks, just a basic perspective, what Elliott wave teaches, well, that was a triangle, right? So triangles causes the final move out of this pattern. So the final move is already happening here. So what this means? Well, it means that there can be limited upside and a potential reversal back into this range that has been in place for 2024. So I don't believe that Pound Aussie will continue straight to the upside from here. I just think that we are trading maybe very close to resistance. Maybe first one is already here, but the ideal one would be at 206. But overall, I would not touch this pair, because we are at new highs here, and the price can turn to the downside anytime. So there is a chance that sooner or later this pair will move back into this consolidation phase, okay, and that that Aussie will do much better, which normally is much better. Commodity currencies will do much better, especially when you are in a risk-on environment. So if we will see maybe stocks stabilizing sometime in January at lower levels, well, maybe that's time. Maybe that's time when we could see potential reversal to the downside here. But now, when we are in risk-off mode, I just think that maybe we could still consolidate here. Maybe not confirming a top yet, but it would be a different story if we will have risk on mode. Okay. Can I see whole count for the S&P 500? Well, if you will go to our, that's our members page. If you go to our website, wavetraders.com, go here to this blog section, as I said, and then check this exclusive 2025 Elliott Wave video outlook. I think we shared these charts there, or maybe we will share them, more of them in January. Okay, I covered a lot of longer term charts here in this video. Okay, traders, I hope that you enjoyed this presentation. It was not that long. Well, still 30 minutes, long enough. Do you think they're still being way free? Yes, I think that stocks, that the S&P 500 did not complete an uptrend yet, and that there will be some pullbacks, and then maybe 2025, in a few months, we will see a new continuation higher. But as I said earlier, the more very important is the US dollar for the whole overall perspective on the markets. You want to see dollar lower to be bullish on stocks. It will be much easier to be bullish on stocks in such case. Okay, traders, again, thank you very much for watching this video. Please Make sure to subscribe to our channel, press a like, leave me a comment below this video if you'll watch this recording later as well. And don't forget, on this special discount EW2025, we have the 30% off still available for the next week or so. So traders, enjoy your day. Wish you all the best in 2025, and don't forget, the market can be very quiet. I'm not sure if you will make a year in the profitable year in the last week of the year. So better to stay aside, spend some time with your family and friends away from the screens, because I think that next year, especially in January, we could have some very interesting price action. Traders, enjoy your day. Talk to you soon. Bye.